What's going on, y'all? We are back. Welcome to the Free Trading Academy, here with another video, and we are talking about patterns. All right. When it comes to chart patterns, there are so many out there. You have pennants, you have flags, you have wedges, candlestick formations. I mean, there's just so many things to trade, right? I really only trade two. In this video, we're going to talk exclusively about one of my favorites, probably my favorite, the head and shoulders pattern. It forms on every time frame, but the most reliable definitely are the 4 hour and the daily chart. So my recommendation, if you're drawing head and shoulders, you should be drawing them on the higher time frame so that you could look in advance. See that the pattern is forming, so you have more time to prepare for your trade. And then obviously on the higher time frames, just like with everything else with supply and demand, support and resistance, they're just a lot more reliable. Okay, so you have four components that make up a head and shoulders pattern. All right, if you don't have these four, don't force the trade. Just wait for the next one because they do occur quite frequently in the markets. All right, you have your left shoulder, which I'm highlighting here. You have your head, which is the lowest or highest point of the pattern, which I'm going to get into that in a second. And you have your right shoulder, and then you have your neckline. All right. So the neckline is the natural area of support or resistance that is formed. Okay. You have your swing high right here, or swing low. Actually, this would be the swing high. So you have your correction, right? Comes back down, makes the final push, the lower low, comes back, all right, makes another swing high. And these 2 points here is your neckline, all right? So once this neckline is broken, then you're looking for entries. Okay, so we're going to get to that in a second. All right, so what we're looking at right here is actually a reverse head and shoulders pattern. All right, so you have your head and shoulders pattern, your traditional, which is what most people think of after an uptrend. All right, price makes a push, all right, comes back, makes another push. This is the head, comes back, one more push. That's the last shoulder, and then down. All right, boom, down. So this is the traditional pattern that most of us think of, but you also, just as many times as you get this pattern, you also get the inverse. All right, and they're both just as reliable. So don't feel like if you see a reverse head and shoulders pattern forming, I'm not going to trade that because I only trade bullish. Don't do that. Okay. They're both reliable. Trade them both. Okay. Some things to look out for when you know you have a great pattern forming. All right. They like to form at the end of a nice trend with multiple waves. All right. So if you're, just trading like a quick correction and you see something, I wouldn't consider that a real valid pattern. Because you might not get such a nice move in the opposite direction. All right, this is really at the end of a nice trend. All right, so you see here you got lower highs forming, lower highs. Price kind of stalls out and then it falls back down again. All right, so you got nice pushes to the downside, nice pushes. And then finally, price is ready to reverse. Keep in mind, this is a 4-hour chart. All right. So this is February till March. I mean, so a whole month. And price was really in a downtrend even before that as well. So you might as well call it a month and a half, 2 months of price falling. So this would be a really nice indicator that price is eventually getting tired of going in one direction, and we're now looking to reverse. All right. So if you notice, I also have my RSI down at the bottom. I don't use a ton of indicators, but like I've mentioned in previous videos, volumes and RSI are two that I do like to use in conjunction with these strategies. All right. So if you'll notice on the RSI, man, price is making lower lows, But what's the RSI doing? It's making higher highs. All right. That's all this pattern is. It's a momentum pattern. All right. If you keep that in mind, then you'll be solid. Um, Head and shoulders is just a signal that the momentum is fading for whatever the current trend is, and it's beginning to pick up for the opposite trend. All right. So this is a pretty aggressive divergence here on the RSI. Again, don't be just strictly a divergence trader. Use this with our other strategies that we've talked about. But what I like about this is we have a clear reverse head and shoulders. RSI is telling us that momentum is about to change. And started marking this off earlier. And we're trading into a demand zone that really hasn't been tested yet. All right. So going all the way back to November, we have fresh demand that was created. All right. Now, if you're just kind of hopping around videos and you're kind of wondering what I'm talking about, we draw our demand zones at the base of an impulse move. All right. So we have a nice impulse buy here. That means that there's a block of buy orders in this area. So we mark this off. This means that there's a demand for price to go up in this level. So we're going to mark that off and drag it into the future and wait for price to come back. So price tries to come back and retest, doesn't quite make it all the way. So we know that there's definitely a lot of buying power in this zone. All right. This is what confluence or confirmation trading, whatever you want to call it, is all about. All right. It's about putting together a whole toolkit of confirmations, things that we see in the market, things that we know have proven to work. We put it all together, and that helps us make great entries and a lot of money. All right. So now we have a head and shoulders pattern. We have a divergence on the RSI. We know we're trading into a fresh demand zone that was created way, way back many months ago. And we're trading, and this is all happening on the 4-hour time frame, which, as we know, higher time frames indicate more reliability. All right. So this is definitely a buy. All right. I mean, honestly, I'm probably taking a buy right here. Just off our supply and demand fundamentals that we've learned earlier. Price comes back, taking another buy here. Now I know for certain we're looking at a head and shoulders pattern. All right, so now I know for the long term, I'm definitely looking to stack entries because we're having a long-term trend reversal. All right, so let's talk entries on the break of the neckline real quick, and then we'll wrap this video up. Okay, so you have two options. So option one, we enter on the break. All right, this is aggressive, but I've traded these patterns for so long; they are very reliable. So I would be willing to take a little bit more risk to enter on this candle right here or enter on the break of this neckline, just because I know, especially with everything else that we see here, price is going to reverse. All right, so you could agree that. So option one is to enter on the break. And then option two, a little bit more conservative, what I like to teach, enter on the retest. All right. So whether you're talking head and shoulders, supply and demand, trend lines, whatever you like to use, whatever kind of support and resistance you like to use to identify turning points, there's almost always going to be a retest. So if you miss this entry, don't panic. Price is going to come back and retest this area, and you can ride it up. Okay. So that in a nutshell is head and shoulders, how you spot them, how you trade them. Again, if you're going back to back tests, which I always recommend doing, you're going to want to look for a nice trend and then look for the beginning of that trend or the end. You know, what happened. They don't always happen at the beginning or the end. Sometimes you get a double top. Sometimes you get a triple top, and price reverses. Sometimes price just decides to turn around and head in the opposite direction without any of this right here. So, but definitely train your eyes to find these patterns. This is a very reliable pattern. Go back and trade it, add it to your toolkit. I'm going to scroll forward because I do remember marking off one here. Okay. So this isn't a perfect example. All right. But you do see you have a shoulder here. I wanted to highlight this one because it isn't Like I said, it isn't the sexiest example, but you do see these happen quite frequently. So this is even within kind of a larger trend here. All right, this is a correction move that we see, a bullish correction move, and then you have a head and shoulders break to the downside. So you don't always, I wanted to point this one out because you don't always have to wait for this majestic, perfect head and shoulders pattern to develop at the end of this super long trend. All right, because here we are, the trend is already established. All right, you get a correction on the 4-hour chart, which is, a solid correction. So you have a push, a pullback, another push higher. All right, buyers try and push it up one more time, they fail. So also you have a neckline that isn't a straight neckline. You get these a lot too, kind of like at some diagonal, basically a trend line essentially. And then once price breaks here, you wait for the retest. On here, you definitely want to scroll down to the lower time frame. Wait for some smaller candles to retest this zone, and then you get a nice aggressive drop. Okay, get your pips, get your money, and get out. All right. So this has been Head and Shoulders. Go back test this. Here's another one right here. All right. This is another one that isn't, perfect because you kind of have another. This is honestly like a double top right here, but then price breaks through and makes a higher high. Buyers try and push it up one more time. They fail. This is another kind of like a little messy neckline, but just to be safe, you want to trade from the bottom. All right. This gets broken, ride it up. You'll have a little bit of drawdown here, but we know that the trend is heading down. All right. And then wait for the retest if you wanted to get in. This is, so this is a good example about why it's good to wait for a retest and continuation, because you could have broken right here. You could have waited on the neckline break. All right. But, you would have obviously wanted to tuck your stop loss a little bit farther back. This is, I don't know if I talked about it a lot in the previous video, but why it's important. A good idea to stack your entries. This is the last thing I'm going to say, and then I'm going to get out of here. So you have, smaller entry here. All right. Say if you're trading, your total risk is one standard lot. All right. So you could have, let's see, like two mini lots right here on this entry. Then you could have a second one up here just in case price retraces a bit. And then you can have your bigger order waiting up here. 8 minis, all right? So that way you're in a little bit of drawdown, but your biggest order is in the back of this zone here. Once this gets triggered, then price falls. So staggering entries is good if you're more of an aggressive trader. You like to trade on the initial break. You don't want to wait for the retest. That's a good strategy as well. All right, so head and shoulders, guys. Go back test it. One more time, left shoulder, head, right shoulder, neckline. If you don't have those components, it's invalid. They like to form at the end of a nice trend after multiple waves, and then enter at the break of the neckline or the retest of the neckline. All right. And lastly, it is great to pair up with RSI, stochastics, MACD, anything that measures the momentum of a trend. Those are good indicators to use when you're hunting for head and shoulders. All right. Thanks for tuning in, and stay locked into the next video. All right. Happy trading. Peace.